Hello, Mr. Sharma. Now that Mr. Jaitley's first full-fledged budget is out, what are your initial impressions on the budget? And let us start with the fiscal deficit number of 3.9%. Do you think that number is good, bad, or indifferent?
I think it has to be seen in the perspective with which we went into the market. The market came on a very high horse, expecting, because of the fact that the survey had given very a good picture. You were saying that probably for next year the country would see a fiscal deficit of 3.6. Inflation was under control, and therefore, if these figures were to give, then obviously the next day the RBI would hold a special meeting and rates would be cut. But because of the fact that the fiscal deficit itself was larger, I think it has created some dampness in thoughts, and therefore you saw the market giving up all its gains and going into the negative territory before closing towards the green in the end. So I think it has taken interest rate cut to their extent slightly further into time. Now that I think interest rates are not going to be cut in a hurry, but I'll ask you, what's your take on interest rates now that the fiscal deficit is what it is, 3.9? Where do you think the interest rates are headed in the near future?
Yeah, basically RBI governor has said in the past that they will closely monitor the inflationary trends and the fiscal consolidation. So 3.6% versus 3.9% fiscal deficit, there is a difference. Definitely, I think RBI governor could take a couple of more months before he goes for the next rate cut.
How do you think FIs are going to react to this overall, because the fiscal deficit has increased?
I think FIs would broadly be positive on an overall market basis. Now there are a few reasons for it. One is about the GAR has been postponed by 2 years. So that is a very good thing for them. Secondly, the budget also proposes to allow investment in alternative investment funds.
Yes.
And the differentiation between FDI and FPI has also been sort of removed. Now we will have one composite cap of the two inflows. Further, the finance minister has also clarified that the FIs operating from India will not be treated as permanent establishment. So this is also another encouraging thing for the FIs. So broadly, FIs on a broader basis will be happy with the budget. They may be unhappy with certain sectors or certain stocks.
I think the FM has really jumped on this opportunity because the rest of the world is not growing as it. If we are going to grow at a rate of 8.1% plus, then we are the largest growth rate we'll have among the larger economies. So you're right to that extent. FI money will definitely flow in. But tell me, how is it going to impact the consumer and the investor behavior on the ground?
Consumers typically there have been some increases in the indirect taxes, especially the service tax. So if for that matter, the disposable income in the hands of the consumers will not grow, will shrink a little bit if at all. Savings incentives have been given, so again there some of the money can go into the savings. So in that, so disposable spendable amount will shrink.
Okay.
So immediately consumer spending is not going to revive unless industry and economy revives and there is general growth in the income levels of the consumers. That will take some time, I believe. Now looking at the overall market, do you think how is the market headed from here and what should a typical trader or investor do from here on?
I think the budget is in the rear view mirror right now. It's over. It's one of the events. Now people will look forward to next events. Maybe how the quarterly results are going to unfold and how the monsoon is going to be benevolent in India or not. But I think more importantly, what he did in the budget was what he didn't do, because you were aware that a lot of channels were running this news that probably the government is going to increase the holding period in the long-term capital gains exemption from 1 year to 3 years. Had that happened, we would have closed today on a lower circuit. So to a certain extent, no matter how many times the government has tried to explain certain things, it is always fumbled on in giving clarifications like car or other things. I think this time they have come out very clearly, and there is not going to be any confusion, and hopefully the capital gains, the taxation exemption which we have enjoyed so many years, I think that will continue. So I believe that the time is right for investors to continue to be invested and look forward to and choose companies based upon the kind of results that they give.
But do you think the markets will keep rising the way they rose in 2014, or one will have to sort of bring down the expectation levels?
I think, Deepak, for that we'll have to find the answer in your own answers that you gave. You believe that FIs now will come in, lock, stock and barrel. You probably, not you, but maybe other fund managers would be trying to open AIFs and bringing in FIs. So I think FI money will dictate to what kind of money does really come in and what kind of, let's say, levels that we achieve. But considering the fact that we are going to have an economy which is going to grow at 8% plus, I think we are definitely headed, we have better times in score, and maybe we'll see a crossing of the 10,000 levels in the Nifty in the next 1 year.
Yeah, and at the end of the day, I think one has to be careful about the stocks that one invests in. Of course, one can also invest in the Nifty ETF basket, but beyond that, stock selection is more important, I think.
You're right, Deepak. That's essentially for which you and I have to keep on contributing to the website.
So, I think all the best to the traders and investors going ahead from here.
Yes.
Have a pleasant experience in trading and investment.
Great. Thank you.